Hey, good afternoon, everybody. So, what I thought I'd do today is show you a couple of trades that I took and how they played out and what I was thinking. So, first and foremost, what I want to do is I want to go ahead and I want to mark where the market actually opened today so we can see that visually. And then I'm going to mark it over here. So, what we're looking at, as you know, when I'm trading, I watch SPY and I watch ES, the futures. One of the things that you did note as you were going into the market open is that it was selling off. There was a solid pivot up here at 509 where you would have wanted to get short from a previous day prior pivot, okay? But it already started to break lower. Well, what happened is we broke lower, we went to the bottom of the overall demand box and then started to move higher. So this is the nice thing with having the indicator that Bryce puts out is it has your sellers and it has your buyers. Clearly, once you saw this reversing, we were probably going to the prior pivot of liquidity. Well, where was that? It would be right here. And then on the futures, it would be in that exact same place. And then you'll note what happened is the market, when it found a foundation and started to move higher, it will chase the prior pivot or your liquid zone. It literally was able to break through it because technology was super strong today, so it pulled up SPY with it. And then what did it do? Broke through, retested. This was your shot to go long. There's your first trade. And then what did it do? It sold off because, again, it's starting to get back toward these candle highs. So the body, not the wick. The wick is further up top. So this is a huge zone of indifference that you want to be cognizant of. Then when you got up here, you could have taken another short play right back down to where? The liquidity zone. If you failed this because you're already in puts, this would have ridden down even further, probably back to the market low for the day, which would have been a huge trade. But note, I'm doing all of the charting on ES and not necessarily SPY. Why is that? I can. They're identical, but there's not as much volume on this pre-market. So when you look at the volume down here, non-existent, compared to look at the volume over here, much more substantial. So as the market then rebounded right back up, where did it go? To the prior pivot, we held, and then we failed again, right back to the support. It pushed up again, chopped around. You have this overall flag, the bull flag, broke higher to the past liquidity, failed again. Where do we come back down to? Our original liquidity zone where VWAP was. So hopefully this gives you a good indication as to why you should be watching ES while you're trading SPY. So if you're trading with Bryce or Team Bull or any of the other traders, that's why they're calling out their levels on ES and not SPY. They are much more defined, definitive. They are to the penny, but you can literally, obviously, take the trade with SPX over here or what I traded with SPY. Allowed me to have a really nice winning day of about $8,000. And it was literally just playing the supply and demand. So with that, hopefully that helped. And I hope you all have a great weekend. And my watch list will be out on Sunday afternoon. We'll talk to you all soon. Take care.